All right, hello everyone. Welcome to our weekly going live with good soil episode here. And as always, we're streaming this live both on Twitter Spaces and YouTube on our YouTube channel for Good Soil Investment. It's being recorded on the YouTube channel, and so you can watch it there anytime. I somehow missed the recording option on this Twitter Spaces setting this time, so I apologize. I'm not sure how many people watch the recorded version on Twitter Spaces, though. How's it going, Matt?
Good, thanks. My Twitter notifications are just exploding though. I had this tweet about door handles that just went viral in like the most annoying way possible. So
Yeah, I
that's
saw
been
that.
frustrating, but aside from that, pretty good.
Yeah, I mean that just went to like a crazy spiral. Like tons of Tesla Q just started retweeting it. Like, you know, tech, Tesla bull can't work out the door handles, and Elon Musk, your car stink. Kind of stuff like that. It was
Yeah,
crazy
it's
how.
just it's
Yeah.
frustrating how it's been so misinterpreted. My original intention. So maybe for those who hadn't seen, I'll just a very quick summary.
Yeah.
We had a large amount of freezing rain a couple days ago. Went out to
You're in
I
Michigan,
was
right?
and
Yeah.
I'm in Michigan. My house is under construction right now, so I couldn't park in the garage. Anyway, I left it out. Went to go unlock the car, and I just couldn't move the door handle because it had iced over, which happens with all cars. Like it used to happen all the time with my ICE vehicle, so it's not uncommon. It's just different with the Tesla because it's flush to the surface. So apparently, the easy fix is just to knock it with your hand. I didn't know that at the time, but I just made a suggestion to Elon saying like, hey, why don't we add a button to release the lock from the app? Which seemed like a reasonable suggestion to me because clearly
Yeah.
it works on the inside.
Yeah.
But like people have just gone viral and they'll say like, oh, like Tesla idiots waste money on like handles and like they've over designed things and like you can't even get to work, and it's just like people have taken it so negatively, and like it's just amazing. I don't have access to that side of Twitter very often, so it was
Yeah.
insightful in a very bad way to see just like the extreme amount of negativity and people delighting in the perceived suffering of others, which it was like, first of all,
Really
like you got the
terrible.
fact that this isn't even an issue, like wrong,
Yeah.
and then you assume that it's like a design flaw, which is not true, and then you assume that like there's huge amounts of regret, and
Yeah.
it's anyway. So
It's insane. Yeah, I saw you tweet later like a poll, like how many people seeing this tweet love Tesla or hate Tesla. And it was like half the people said they hate Tesla. The people that you viewed that voted on that poll. And I was like, wow, like thousands of people saw this. And you told me I think it had like millions of impressions. So I don't know.
yeah,
I'm so
it's getting up to
suspicious of like
20 million impressions, which is
yeah,
crazy. Like
that is crazy. That 20 million. Wow. I'm suspicious of a lot of bots in Twitter, like programmed to just hate on Tesla. And they're just like, can pass the Turing test in the context of Tesla, but, all they're programmed to do is just like retweet and with each other. Because if you look at all these anonymous handles that all like spew hate about Tesla, most of them are anonymous. Like they're not real people. Like they don't want to betray it, but it signals to me that there could be a lot of bots, like just like following each other, like thousands of bot accounts following each other. So they all have like 2,000 followers, but they're also all following like 2,000 people. It's just like this crazy tunnel of like, echo chamber of Tesla Q bots that like, are just regurgitating and magnifying anything negative about Tesla. I don't know. I feel like that's a possibility. What do you think about that? You think that's a
yeah, I think so.
conspiracy,
I
or you think
mean,
that's a possibility?
there's definitely bots out there, and they definitely flock
Yeah.
to the negative. I mean, I've seen this. Sometimes I just like look on people who've recently followed me, and it seems like the majority of the time when I do that, it's somebody who hasn't tweeted anything and an account created just this month,
Yeah,
and
I see tons of that. Yeah.
it's like if you look at them for a little bit, it's like there's suspicious behavior. So I think a good chunk
Yeah.
of my actual followers are just like these bot accounts, and so
I
it
agree.
makes sense that there'd be a lot of those on the negative side. But
Just
I
for
don't
like
know.
hire,
It's
like someone's farming out a bunch of bots and you could
yeah,
like buy them. And if you're like, I don't know, I feel like there's some big business involved in that. And for like some amount of money, you could just buy a ton of like social media hatred toward a brand and have all these bots just go off on it. I mean, even on YouTube, it's out of control. I think like there's this one YouTube channel I've been following that I'm trying to get the guy, there's one also called like Fun by this Twitter handle Thunderfoot, but the the O's and foot are zeros. So if you look him up, you could see he's got 1 million subscribers. How is that possible? And it's all negative Tesla videos. It's like incredible. But you look at his short videos and you see all the comments, and it's just like, it's all anonymous things. I wonder if it's just like bots feeding amongst bots, and there's like even many more millions of bots on YouTube comments versus Twitter. So it's
Yeah.
just like a crazy world, maybe, of bots
I
taking
think
over social media to some degree.
I think that's probably a part of it, but it does also seem that like legitimate people still have huge misunderstandings about Teslas and
Some of
electric
that too.
cars in general.
Yeah.
So yeah, it seems to me that there's just
Yeah.
I kind of view it as an opportunity, honestly, because there's so much room to grow from here. I mean, like even my
Yeah. There's
closest friends and family, they don't really understand Tesla in any like deep, meaningful way. Just like the car itself, not the investment. So that's why I
yeah.
get so excited because there really is so much room for growth still. I mean, all these people commenting and like spreading all this hate, like they clearly haven't tried the products. They
Yeah.
don't know really what they're talking about. So
Yeah. 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 It's insane. And Elon had just commented about, the media FUD campaign from 2017 to 2019. And, I think that's when it all started. Like it got really bad with the bots kind of, I don't know. Maybe it's conspiracy theory, but I just feel like there's an overwhelming amount of bot. I'd love to talk to like people inside Twitter. If any of our followers like work inside Twitter or inside YouTube and kind of help monitor the bots situation, that'd be a great interview to catch, just to talk to someone kind of on the inside that kind of has a better understanding of what's going on with that, because it clearly is an issue. Just who knows how big of an issue it is. I mean, they've talked about it on like calls. They've had to purge so many subscribers, Twitter has, that are identified as bots, and then you have like, imposter accounts. Like I've been trying to report this Emmet Peppers with, an imposter account of mine that has an extra S at the end of Peppers. And I've had like probably a few hundred people report it that follow me, and I've reported it twice to Twitter, and I get the same response that doesn't violate their consent. It's clearly a fake account. Maybe it's going to be a bot, or I don't know, but there's so many fake accounts that I just don't know how big of an issue it is. Is it 10% of YouTube commenters and Twitter commenters, or is it 90%? We have no idea. Like you have no idea. Like how do
yeah.
we really know? Like you can't. It's crazy. So I'd love to talk to someone on the inside in that kind of field to kind of understand a little more about that situation, because I'm sure it's hard to control.
I wonder if
Yeah.
they even know though. Like it's got to be hard to tell. It's not
Yeah.
not like you like click a button when you sign up. It's like like male, female, bot. Like
Yeah. Yeah.
it's not entirely clear, but
They've got to
um,
have some. There's got to be some people that have some thoughts that
sure.
we don't know whether it's 10 or 90%, but there's got to be some people that like have a feeling it's either like 25% or 50% or something like that kind of frame. You would think. So yeah, there's got to be some people that have a better understanding of it, than we do. So that's interesting to talk about. Anyway, so now let's talk about the macro market a little bit, and then what are your thoughts on the tech and growth stocks? I mean, it feels like they've kind of stabilized and bounced around the last week or so since the Facebook earnings and, Amazon's earnings. And there was that increase, it was a wild ride last week. I feel like maybe those big earnings are out of the way. Now you have a huge week of, earnings coming up. Let me pull up I'll share my screen with this. For anyone on YouTube Live, you can see, but it's just a window I'm going to share of all the earnings this week of all the smaller companies. So today you got the big name everyone's talking about after the close of Peloton with this, potential acquisition we can talk about in a second. But, you have Chipotle, you have
I think
Lyft.
they were before market this morning, actually, Peloton.
Oh, Peloton did it before market. Okay. I
Yeah, and
didn't
they
catch.
they fired their CEO, and it was yeah,
Oh yeah, I
that one's
saw that
interesting.
news.
We can dig into that.
Yeah, yeah, yeah. So I guess this chart here I have pulled up, this infographic. It says Peloton is supposed to be after the close today. So I guess maybe they just did an early announcement or they got that wrong. But Wednesday, there's a bunch of earnings you can see in this chart. You got, Sonos, Uber, Walt Disney, CVS before them, all kinds. And Thursday and Friday even have a few earnings. So you have a lot of interesting smaller company. Speaking of Twitter, that's Thursday after the close. Affirm, everyone talks about. We haven't studied that. Zillow, Cloudflare, a lot of interesting companies on Thursday after the close. So next week is Roblox. That's something we're interested in, obviously. So you got still a lot of smaller company growth stock earnings this week and next week and such. So I feel like the big companies, set the table, and it's a mixed bag. Facebook was disappointing, but most of the others were very impressive. Um, and so I think the market sort of stabilized, the macro market for growth in tech stocks. What do you think, Matt? What's your kind of inclination here?
Yeah, it does seem to have stabilized a little bit. And I apologize if you hear some banging in the background. We got construction going on, which I'm further away from it than my normal spot, but you may still hear a little bit of that in the background. So I apologize. But it does seem pretty clear that there's a bit of stability, at least compared to the the extreme um, volatility that we saw in January, which of course was bound to slow down at some point. But what I think is kind of interesting is just the disparity of outcomes between the different previous darlings of like the growth stock industry. So Netflix started off earnings season on a really negative note. That
Yeah,
stock
that
dropped, what was it,
Netflix and
like
Facebook are both
25% or
bad.
something?
Yeah, yeah,
Yeah, so like Netflix and Facebook pulled back really hard. Snapchat fell like 25% the day before earnings, just because
the
all the
Facebook.
concerns about Facebook and the
Yeah,
issues with the security, which they had highlighted as a concern with Apple's security changes in Q3. So for them to post a huge earnings beat, it was, I think, really impressive. So I think what we're seeing now is the market in general has like all boats have fallen. But now I think the market is kind of reassessing who are going to be the winners and losers in the medium to long term. So I think you're going to see potentially a good amount of upside from here, depending on how that shakes out for individual companies.
yeah, I think so. And 10-year the rate everyone's kind of been following, that's close to 2% now. I mean, that's climbed, and the growth tech stocks haven't really, it's climbed from like 1.8 to like 2% in the last couple of weeks, I feel like, and it hasn't really had a huge impact on the growth in tech stocks, like it did when it initially started climbing. I think, a year ago, I remember there was whispers of it climbing, and it was like creating all kinds of volatility in the growth in tech stocks last February. So yeah, so I don't know. I feel like the market sort of adjusted, and there's a bunch of interest rate hikes kind of already priced in, and we'll just have to see and keep an eye. The macro markets are very hard to understand and predict. There's so many variables. It's not just interest rates. It's there's politics. There's company earnings. There's political, geopolitical stuff. There's commodities. There's so many things that are involved in the word the macro economy. So, but any one of those, all those things kind of work with each other, and we'll just have to see what happens in the next few months. But I do have a feeling, if I had to guess, that we've hit our bottom, and we're kind of starting a recovery, hopefully soon, or stability at least, getting ready for a recovery, maybe.
Yeah, and I think one of the promising signs is that if you look at the yield on the 10-year, I mean that crept up very close to 2% today. It was like 1.95%, which is much higher than it's been in the last couple of years. So what I find pretty encouraging is that the market had been expecting that to happen. Now that it's happened, it's not just crushing growth stocks today. Growth stocks are modestly up for the most part. So I think that's a nice sign that even when the yield on the 10 years is jumping so high, the growth stocks are not just getting annihilated immediately. So that gives me some confidence too that we may have hit the bottom
Yeah.
in this sector.
Yeah. All right, I'll stop sharing this infographic of the earnings, and we'll go back to our normal screen. So, in terms of like Tesla and Elon, moving on to kind of specific companies, one thing that's interesting is there's a Starship presentation. I believe it's Thursday, February 10th, if I'm not mistaken. Elon's gonna give a kind of a presentation of the Starship to the public, and you have any thoughts on that? Do you think anything is going to be interesting there? I mean, it's not Tesla related, but anything SpaceX or
Yeah.
Elon related, we love to
It was
discuss.
kind of hilarious the way that he announced that too. Just somebody on Twitter asked when he was going to do it, and he's like, "Oh, Thursday." So I thought that was
Yeah.
pretty funny. But yeah, I mean, he's done these updates in the past from time to time. I
Hmm.
don't know. too much more about what we might learn. I mean, the Raptor has been the biggest kind of issue for them. So if
Yeah, the
they
Raptor
can,
engine
and it sounds
production.
like they made a good amount of progress on that, getting the internal pressure up closer to 300 bar where it needed to be. So I'm hopeful that there will be an update on that, maybe how production is going. But
Yeah.
yeah,
That was
we'll see.
one. It's interesting to study that because it gives us more context when we study Rocket Lab. And I know one interesting comparison between Rocket Lab's, Archimedes engine they're developing for the Neutron and the Raptor that SpaceX is creating for the Starship. That Peter Beck has commented sort of on, not directly, but you can connect the dots. Is basically, the Raptor engine has to be at a like maximum power in order to lift this maximum amount of freight into space that the Starship is built to carry. And so you have to like get the most out of every Raptor engine to really get it to work right. Whereas Archimedes, that engine with the Neutron, they're building it in a way that they feel is more sustainable, where the engine isn't going to have to be to max, utilization. It doesn't have to be stressed to like 90 or 100% to get the Neutron working. It's going to be built where it's, more than enough efficiency can get the Neutron up so it could be reused more times, more likely, versus, an engine that's maximum stressed. His philosophy is that, that's less likely to be reusable as much. So that was an interesting kind of footnote that I remember listening to Peter Beck talk about, is the difference between SpaceX's Raptor and Archimedes engine. So I don't know, something to watch. We'll see how the Raptor engine performs on reusability, I guess.
Yeah, it's a good point. Everyday Astronaut had a great video recently about like why don't rocket engines melt, which is actually like a pretty good question when you think about it. And I think particularly with the Raptor, there's that's going to be a pretty important thing to get right. So yeah, I'd be curious to hear a little bit more of that, how they handle the kind of extreme temperatures that they have there.
Stress
So
and stuff.
yeah.
Yeah, they'll have to refurbish the engines more often, maybe. Yeah, who knows? So we'll keep an eye. We'll see how this presentation goes on Thursday. I'm super excited to kind of see what Elon unveils. I think Elon was so focused on Starship for a while there. Like it was his biggest, like he seems to gravitate towards like, he has lots of things on his plate all the time, obviously, from like Neuralink, Boring Company, all the Tesla stuff, all the SpaceX stuff, and other side things he's working on. But I feel like he always has like seems to have like a really top priority, whether it was like the Model 3 production line ramping up in 2017, 2018, to more recently is the SpaceX Starship design and Raptor engine, difficulties ramping. Like I feel like that was kind of the more recent. And now he seems to be kind of swaying toward, pivoting over towards maybe focusing more attention on the Tesla bot as like his next big thing. He's going to focus a lot of attention and priority on. He's got all his engineers around him, which he can delegate lots of stuff to. But him personally, I feel like he has a top priority. He kind of swivels between on different occasions, and I feel like maybe he's kind of this presentation kind of signifies maybe the end of his extreme focus on the Starship issues, and maybe they've overcome the major obstacles and hurdles where he feels confident enough for it to kind of work, which is exciting. So we'll see how the presentation goes, and in terms of Tesla, I mean, anything you brought up an interesting tweet about the leases. I know a lot of people listen to us. They want to hear us talk about Tesla. The stock price is just kind of bouncing around with the tech stocks right now. But you brought up, in terms of like their fundamentals and financials, tell us about your kind of the story around leases that you talked about with your tweet.
Yeah, sure. So in 2019, Tesla introduced the lease on the Model 3. And so the one unique aspect of it was, typically with the lease, you give the owner the option to just buy the car outright at the end of the year or at the end of the lease term. So, you lease a BMW and it actually saves BMW a bit of time if you just say it's a $50,000 car, you do a lease for 3 years, and then you can buy it for say $30,000 at the end of its useful life. That's kind of a normal thing, and a lot of owners will kind of choose that option. But Tesla explicitly denied that capability, so they will get ownership of all the leased vehicles that it has ever produced at the end of their life. This is important for the Model 3 because that's obviously a lot higher volume than the S and X, which have been coming off lease for a large amount of time now. But
Hmm.
so in Q2 of this year is the first time that those initially leased Model 3s will be kind of coming back into Tesla's hands. And the way they book the accounting for this is they make an estimate of the residual value at the time of the lease. And typically it's something in the neighborhood of 59% of the upfront cost. So if it was a $40,000 Model 3, and you take 59-60% of that, and you say, all right, that's the residual value. So Tesla just has that on their balance sheet as an asset. The interesting kind of math behind that is if you look at residual prices or used Model 3 prices right now, they're around the absolute lowest I've seen is like 39,400 right now
Mm.
for a used
Yeah.
Model 3 in the United States.
That's
And they
probably a
go all
really
the
run
way.
down one that's like got a lot of mileage and wear and tear
Yeah.
too.
Yeah, but so like even ones that are like a decent amount of mileage are pretty high prices, and some of them go up to like $70,000, which is
Wow.
crazy.
Yeah.
Yeah, yeah, yeah. So if the actual value that Tesla can monetize is like $50,000 or something like that, which is slightly lower than the average used Model 3 price right now, then there's potential for like a $20,000 to $25,000 gain on each of those vehicles that they sell. And remember
Mm.
that Tesla actually attaches full self-driving to all of their used vehicles right now, at least that have that hardware. So that's another kind of way for them to gain some margin on this. Um,
Hmm.
so if you run the numbers, I think there were just under 5,000 Model 3s in that Q2 2019 timeframe. So it gets to be, I forget the exact number I had out there, but it was like $170 million or something like that of margin potential just
Mm.
for that used vehicle leases. So in the
Wow.
context of like a billions of dollars of earnings, it's not a huge deal, but it's just kind of another one of those drip 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 of profitability that Tesla
Yeah.
has, and it's another
Just
kind of like
adds.
lever that most people aren't really thinking about. And this is recurring. It's not like a one-time gain of like a net operating loss recognition that's just like some weird
Yeah.
accounting thing. Every as the Model 3 ramp went on, the quantity of leased vehicles increased exponentially over time. So every
Yeah.
quarter starting in Q2, it should be a higher amount of profitability that we're seeing on that services line in the financials. So
Yeah.
that to me is really exciting. And if they can solve autonomy, what they said at the time was they want to use those vehicles for their kind of in-house robotaxi fleet, which would be obviously even way more profitable. So
Yeah.
yeah, I love the potential for just all these small little things to add up to just like a huge earning surprise when you start layering them on top of each other.
Yeah, the Tesla very wisely at the time, I remember, said like, we'll offer the leases, but all the leases going forward, you're gonna give up your right to buy the car at the end. Tesla's gonna get them back, and I remember like wondering like, that's pretty optimistic for them to think that, it's gonna be profitable for them to just, take all these cars back and, full self-driving will be ready by then. But here we are, 3 years later, and it seems like it was a very wise move they made, given also the undercurrent of used car prices, skyrocketing, especially Teslas, in particular, those prices. So it's like the benefit, the whole economy within the car industry of car dealers leasing cars, and then getting them back and selling them as approved pre-owned cars. There's all kinds of margins in there that car dealers survive on and make for all the business owners of these car dealers, used car dealers, and make money on. And so Tesla, by just being so vertical, is able to eat all that margin up themselves and improve their own underlying business profits. So it's kind of cool to see this happen. They're just simplifying almost like a much more complex economic system within the car industry that's already been out there, but by keeping it vertically integrated within their own platform. So yeah, I think it's going to help boost margins. And initially you said 5,000 Tesla Model 3s were from Q2 2019, you said, or something,
That's
right?
right. Yeah.
So that number increases dramatically each quarter going forward, I think. So it's going
Yeah,
to
I
be a
think I think
huge.
over time the percentage of leased vehicles has decreased, but
Okay.
that's been more than outpaced by the increase in production since then. So I
Yeah.
think like last quarter in Q2 19, it was something like 15,000 vehicles. So like a 3x increase roughly, you know.
Okay.
So that, I mean, that's still a huge increase. And so then you're going
Yeah.
from, you know, 100 something million of margin potential to close to 300 million, you know, three
Yeah.
years from now. So
Yeah.
yeah,
Yeah.
it's just it's kind of crazy. And then like if you think about the fact that, you know, they really designed these cars to be like driven for 1 million miles.
Yeah.
I think once people still don't really believe that, I think for the most part, you know, but
Yeah.
if that turns out to be true, then you could imagine the residual value would be even higher on these, and, you know, would create even more kind of pressure from, you know, ICE
Yeah.
sale. People considering like a used ICE versus a used Tesla. Well, you know, okay, this used Model 3 has 500,000 miles, but I can still drive it for, you know, 10 more
Yeah.
years.
And it gets software
Um,
updates still, and I can upgrade the MCU chip inside or whatever if need be, or it's already been upgraded by Tesla probably.
yeah,
So
yeah. So I think there's, yeah, when you really understand this stuff deeply, it's hard not to kind of get optimistic about all the different levers that they have to pull for profitability. So yeah,
yeah.
this is just like one random one that I think a lot of people have forgotten about.
Yeah. Yeah. I agree. Anything else about Tesla specific? And we'll go to Q&A in a second, but anything else Tesla specific before we I just wanted to mention some of that Roblox real quick too, but anything else Tesla specific that
No,
you think of?
it seems like it's been a you know, kind of quiet news week. You know, I think Sandy Monroe did a really great teardown on the plaids. If anyone hasn't seen that, I'd recommend checking that video out. But
Mhm.
no, I
Mhm.
think it's been a lighter news side for, or a lighter news week for Tesla this week.
Yeah, yeah. Um, I see before I talk about Robot Martin, who's been following us a long time. I see him in the chat. Recognize his name and I've corresponded with him on Twitter and stuff. He says, "Any idea what's holding back the Tesla plant openings?" That's something I wanted to bring up too. And these plant openings seem to be getting delayed. Um, but on the flip side, what if what if they could have opened the plants maybe a little prematurely, like a month or two ago? But they decided to just wait until it was, more of a ripe time to open them when the supply constraints of chips shortages in particular ease up. Because right now they still can't maximize the efficiency of production capacity at maybe a combination of Fremont and Shanghai because of some chip supply shortages kind of still, existing. So I'm wondering, on a silver lining, optimistic point of view, I know I've expressed, I was on Dave's channel the other day and was saying like it's really concerning. These factories are getting delayed, but what if it's really just linked to the chip supply shortages? What do you think, Matt? Do you think that's a possibility?
Yeah, I do. I mean, it seems from the comments on the earnings call, the Q4 call, that the existing plants were supply constrained from the chip shortage.
Yeah,
So
yeah,
if
yeah.
that's true, then it seems hard to imagine that, you know, you could get meaningful, you know, production in,
Production.
say,
Yeah,
December or January
they don't have the
when that issue
chips.
is ongoing. So
Yeah,
that to me does seem like the kind of
the
key
bottleneck
bottleneck at the moment,
of
which of
everything.
course will change over time. I mean, they were even saying they're shocked at how much, you know, how many new fabrications are coming online right now, or over the
Yeah,
course of this year. So there should, maybe not should, but there's potential for like a glut in chips, maybe
yeah,
1 year from now. So by the
yeah,
time that happens, like this will, yeah, it's just part of like the struggle of going up the S curve, right? Like we're at a really
yeah,
hard time right now with the S curve, because even if you have the physical capacity to do it, you just don't have the supply chain to handle it. So
yeah,
yeah, I'm sure they could make some out of there, but it wouldn't be close to full capacity. It seems likely. So I think that's a good point to bring up.
yeah, yeah. And I see one other question before. Any comments on Meet Kevin's apocalyptic stance on the markets these days? Feels like he needs a hug. Yeah, that's something I've been thinking about. I watch him occasionally in the mornings or something when he's live because I like to listen to the live stuff when the markets are opening, and sometimes CNBC or Bloomberg, is focused on Europe still, and CNBC is kind of like, I don't know. I feel like I'm getting dumber sometimes on listening to CNBC, depending who's talking. Sometimes they have really interesting guests on, but a lot of times the pundits are just kind of reading headlines. But I do understand me where me Kevin has his view, and he's successful entrepreneur, a very successful YouTuber, and he's done well investing. And who am I second guess what he thinks about the markets. He might be right. But I also see, like, for me, he does this all on his own for the most part. And it's, on one hand, that's really commendable and incredible. But on the other hand, for me at least, if I was on my own for the most part, my head is sort of like a bad neighborhood. You don't want to be there too long by yourself. Like, I feel like having Matt here as like a trusted partner to bounce things off of, it helps us kind of clear the air of like what's our fear, our own, created fear mongering in our own head versus what could be real or not, or, and I just think that's really helpful to have like a trusted, few people or partner to like talk about very consistently on where you think the markets are going and bounce ideas off of. Because if you just are left to your own, me left to my own device thinking about that stuff, sometimes it gets a little wacky. So even when I was trading Tesla all those years, or not trading, but holding Tesla and Tesla options all those years, I had a few people that I would talk to regularly about Tesla. And it would kind of help my fears kind of subside about like, hey, don't be so, this Goldman Sachs downgrade doesn't mean anything in the big picture. It's just a buying opportunity if you have any dry powder kind of thing. So I don't know. I just wanted to comment on that because I know a lot of people are follow him. He's got like millions of subscribers, and I'm sure a lot of our subscribers follow him to some degree. So, he might be right. Who knows? But we don't necessarily think it's the markets. We think, like I said earlier in the beginning, that sort of a bottom might be in place already. But we'll see. We'll see how time goes.
Yeah, yeah, and we do like to look at all sides of things and challenge our own opinions. So
Hmm.
we've been saying for a while that kind of fears of macro collapse seem overblown to us. But that doesn't mean we kind of ignore those facts. So Spot
Yeah.
Gamma had a great guest on maybe a week or two ago, who kind of laid out a case for like macro collapse, and the kind of selling we saw in January, he was saying was just like the tip of the iceberg, and kind of gave all these reasons why. A lot of them were kind of like technical indicators and things like that,
Hmm.
which I'm a little bit skeptical of. We talked about that in the past. Um, so listening to the reasons that he thinks that things are going to get a lot worse in a macro environment is helpful. But then you're also listening to like Woods has been doing these great like Friday, like I forget exactly what she calls them, but like she digs into all the
Yeah.
macro kind of reports and all the details that she keys in on. And I think
Yep.
her rationale and her reasoning seems a little bit more kind of clear headed and linked to actual data that's coming out from these various economic reports. So
Yeah.
we always want to kind of keep abreast of what's going on with macro developments, and really key in on the kind of leading indicators. But it seems more likely than not to me that the damage has been done on the macro side, and now it's kind of a question of like what does the recovery look like from here? Of
Yeah. Do
course,
we
we could
just
be
kind of
wrong,
stay
but
flat for a while or trade sideways for a while, or do we kind of bounce back up? I remember in the 2020 crash of COVID, the market was violently going up and down, but mostly down for a while for that initial, 1 or 2 month decline in the NASDAQ.
Mhm.
And then it did stabilize like it is right now, for a couple weeks there. And that was when I closed my puts and started after a couple weeks of stability. I decided, hey, it's time to redeploy my cash, and sure enough, I was caught it right, and the market rebounded. But there was a good, like, I feel like 2 to 4 weeks of stability at the bottom before it really took off. So who knows? History doesn't repeat; it rhymes. I always think of that because it doesn't really repeat usually. It just rhymes. But maybe that'll be the rhyme this time. Maybe in a few weeks, the tech stocks will start taking off again. Tech and growth stocks. So we'll see. And one thing I wanted to mention before we get to the queue, before we post a bunch of questions and answer them one by one, is Roblox. There's a big short report put out by them, and I view it as more of a buying opportunity because the short report to me was about like pedophiles on Roblox, contacting kids, and I responded to it and publicly to the guy, and the guy's in the business of writing like short reports, so he's probably benefiting somehow from hedge fund shorts that are short these names that he puts his reports on. I would imagine more than just getting headline news attention. I think, but I don't really know his business model specifically, but he's definitely trying to create a hit piece on shorting Roblox. I feel like, and the response I put out, I looked at it and I saw Roblox's initial response, and Roblox has a very good working relationship with the FBI and other international agencies for safety and security. And they report that's like one of their top pillars of their business is the safety. And they built incredible amounts of parental controls. And it's really a question of the internet and kids. It's not a question of Roblox and kids. Like no matter what your kids go on the internet that has interaction with people they don't know in real life, there's this danger, of strangers, pedophiles trying to, talk to kids or whatever. And so it's really an issue of the internet and kids, not Roblox and kids. If anything, Roblox is the safest place for kids to be interacting, in my view, because they have these incredible safeguards in place that parents can use, parental controls. It's really a question of parents learning to use the parental controls on Roblox, whereas many of these other things, whether it's like Among Us, or I don't even know about Minecraft or what, there's all these other things kids use that has, interactions with, people they don't know in real life. And, those parental controls might not be as extensive as Roblox's in many cases. And so I think Roblox, you'd make the argument, is actually the safest place if you're going to let your kids operate on the internet. That's the question. And so, I just think that's what people need to be discussing, not Roblox specifically. So that was my thought on that, I
Yeah,
guess.
I read that report too, and it's like, it's kind of heartbreaking, all the, like horrible things that have happened there. But
Yeah.
in my mind, they really failed to kind of make the connection that it was like a systemic issue or like negligence at Roblox.
Yeah.
In following Roblox like we do, they really do mean it when they say that like community safety is like a pillar of their DNA. In my mind, I think there's a good analogy here with Tesla, where like Tesla clearly has like an insane focus on safety when they're designing their vehicles, and they're like very much the safest vehicles on the roads right now. But you could very easily pull together a similar sort of report that said like, oh, look at all these, accidents where Tesla's like either caught on fire or like ran into something. Like you can like create a very, damning list of incidents where Teslas have been involved in, serious or fatal accidents, and it'll, be a bit of a tearjerker to read through that report. That doesn't
Yeah.
mean that like Tesla has a lack of focus on safety. So I think
Yeah.
the same kind of analogy applies at Roblox. Like, of course,
Yeah.
bad things have happened on that platform, but it's a huge stretch in my mind to say, okay, bad things have happened on the platform, therefore it's like a home for pedophiles, or it's like the management is negligent, or they're not doing
Yeah.
anything about this. So to me,
Yeah.
it left a lot wanting in terms of like an actual short investment thesis report.
Yeah. Yeah. So we'll see what their earnings is on a week from today. I'm excited to see how that pans out. We know what happened last earnings, but I don't
Yeah.
think that type of response of a 35% share price increase over from the earnings is going to happen this time. But I think it hopefully will lay the foundation for strong growth still coming with Roblox. So we're keeping a close eye on that. So yeah, with that, let's go to Q&A. We have about 20 minutes or so to just go over as many Q&As as we can here. So from Mark Gomez to Hada on YouTube, when do you consider Tesla will pay dividends or repurchase shares? So I touched on this a little bit with my chat with Dave the other night, that at some point, I think sooner than people expect, Tesla is going to be even more flush with cash, and they're going to want to do something. Obviously, they're expanding as fast as they can, and they got a lot of projects on their plate. The Tesla bot, they can't build factories to build the Tesla bot until they've completed all the design iteration, obviously, and that could be years away. They can build more factories for cars, but how many can they really do at once, right? I mean, there are chip supply shortages, obviously. Maybe they do like a fab factory for building their own chips or something. I don't know, but that was talked about not too long ago. I think there's a rumor of that, but it could take 5 years for them to get that factory up and running. Although in Tesla time, maybe it'd be like 2 or 3 years. Who knows? So there's lots of things they could do to deploy their capital to expand production. But I think their cash balance will accelerate faster than they can spend the money efficiently, to be honest. That's what my after thinking about it a lot, I think in like 3 to 5 years, they'll have so much cash. They'll be printing so much cash, especially with full self-driving by that time kind of being more into place. Like Elon is already spread thin with so many projects. He's not going to like create even more. Maybe the vertical takeoff and landing jet. That's, that's, they're going to have tens of billions on their balance sheet. They're not going to have like single digit. Any new project will be single digit billions to develop and build out, I'm sure. So they could have like in 5 years, they could have like 100 billion, or plus on their balance sheet if they don't really spend it fast enough. So just I think that people are going to be surprised with just how fast their cash balance gets added to, and I think for that reason, at some point in the next 5 years, that Elon is possible that he just start buying back shares to deploy. Instead of keeping it in cash or Bitcoin reserves, he'll just say, all right, we'll just buy back shares, because he knows if there's no, if they have tens of billions of capital on their balance sheet at all times, that's plenty, but they don't need hundreds of billions, right? And if something happened where they needed to raise, 10 billion quickly for some reason, they could always tap the markets in an emergency case scenario. But, again, but I just I don't see him. I think at some point when they get to the 100 billion cash reserves mark, by that time they'll be buying back shares. Before then, I don't know. What do you think, Matt?
Yeah, I think I agree with everything that you just said. I would just add, in the past, Elon has made the comment that they want to run the business kind of close to break even from a cash flow perspective, but then he said once autonomy is solved and you've got robo taxis, then he would expect the company to be, I forget his exact words, but it was something like ridiculously free cash flow positive.
Yeah.
But I mean, if you look at their financials right now, I mean, they're already generating a lot more cash flow than they need for their, for the capital spend plans. And that's going to be true going forward based on kind of their expectations of capex going forward, which they laid out recently. So one of the, I think another just underappreciated aspect of Tesla's financials is the fact that they're working capital negative. So in other words, their accounts receivable grow slower than their accounts payable. So they get the cash right up front when when a customer takes delivery of a car, but then they have oftentimes 60 days to pay suppliers for the parts. So most businesses, as they grow, there's like a cash flow drain as the top line kind of sucks up working capital. Tesla has the opposite, which is like a great issue, or a great kind of setup to be when you're growing at 50% plus per year. So the fact that they do have that negative working capital balance, which creates cash flow as they grow the top line, I think that's definitely going to help them just handle any capex that they need. And whenever they do solve autonomy, I would expect that they flip the switch on either dividends or share repurchases. I would think they might do dividends. I've had this pet theory for a while that Elon would use those dividends to pay for, like, so his portion of those dividends would be quite large, obviously.
Yeah.
And he would use that to kind of seed the Mars colony. Of course, he could just sell shares too, but why not retain ownership and let the price get higher over the next decade or so, and then just get that cash flow to seed the colony.
Yeah, no, I think there's some merit to that argument for sure. And yeah, he'll need a lot of capital. I think he mentioned like $1 trillion or so. He did the, napkin math in his head, I'm sure, in like an instant, but I think he referenced like $1 trillion at some point is needed, or something in the $1 trillion range is needed to get enough mass over to Mars to, build the foundation of a self-sustaining civilization or something after they get the Starship up and running and everything. That's still a massive amount of capital. So yeah, let's go to the next question. From Clips of Innovation on YouTube. Question: the wait time has been 1 month in Europe for the long-range Model Y. Does that say something about demand? In the Netherlands, a long-range Model Y is 64,000 euro, while an ID4 is 48,000 euro. So yeah, that's interesting. I didn't know that the wait time in Europe is just 1 month for a long-range Y. I mean, they're really getting a ton of exports. I think that maybe signals a massive production ramp in China going on with the exports, because the first month or two of the quarter in China, Model Y is being built, is being exported probably mostly to Europe. And so that makes sense that, they'll get all the Model Ys being built in China right now, and they've just really ramped up, production in the last few months there. But all that production is being, moved to Europe. That doesn't surprise me, the made in China Model Ys. But that's expensive. 64,000 euros, and the ID4 is 48,000. I mean, what does that say about the quality of the Tesla? I guess if Tesla is selling as many as they can at 64,000 versus an ID4 40,000, I mean, that says to me something strong about how much people value Tesla, the brand, and those products versus Volkswagen at this point. What do you have any thoughts on the question, Matt?
Yeah, so I didn't know that either, but I think your comment about the staging is right. The only other thing I would say on the price difference is it's important to keep in mind there's that value added tax. So cars
Mm,
that are produced in a foreign country, have a big value added tax which is applied to them. So I think that's going to be one of the benefits of having the production localized in Germany. Once they get that up and running, they'll be able to kind of avoid that huge VAT tax, and that should help them to be able to lower the price, which should reach a much higher pool of demand when you can get it for, let's say they get it close to 50 or maybe a little bit north of 50,000 euros. I'd imagine there's
yeah.
a lot more demand at that price point.
Yeah. Someone in the comments, Marco Sanders, just said Netherlands Model Y long range is not available till May of 2022. So maybe there's a specific, country that it's available next month in, where they have some extras, I don't know. Or he also says that the Model Y Performance is available in March. And that makes sense. That's their highest margin by far, the Performance Model Y. So, if you're ordering, they leave, enough capacity to build enough Model Y performances to let people skip the line if they're willing to pay up for the performance versions. I think that's sort of what they've done. It makes sense, financial sense. If you want to pay 10,000 or 20,000 extra for the performance version, maybe it only costs Tesla an extra 5,000 or 3,000 to add that extra motor and stuff. And of course, they'll take that extra margin and put you at the front of the line and make sure you get it the next delivery of ships that have the performances on it. They'll just put more performances on it instead of long range versions. Yeah.
I think it's important to look at all the different geographies though. So, I do that from time to time, just look at what's the wait time in the US, what's the wait time in Europe, what's the wait time in China. And the wait time in China right now is longer than I've ever seen. It's, 3 to 4 months for a newly ordered Model Y. And it used, like, for the longest time, it was just, 2 to 4 weeks, which was an indicator to me that there was not a lot of local demand there. So I think that's a really good sign overall that the overall demand from the Shanghai factory appears to be stretching out, and at least until summer.
Yeah. Another guy in the YouTube comment just said Germany Model Y is also available only in May. So it seems like this question, I don't know where it's coming from, but it seems like maybe it just meant performance Model Y. But most of the Model Y, the rest of Europe is not available until May, it seems. Another guy says, Maros, how did you two meet? Seems like a match made. Yeah, we just did an episode of the Nightcrawler podcast. If you Google like on Spotify, Nightcrawler and Matt and Emmet Peppers or whatever, you'll see it. But we were interviewed by a colleague, another startup hedge fund manager, and we go over that story a little bit in detail there. So it's interesting if you're interested. All right, next question here. Andrew Bazile, do you think the SEC leadership is wise enough to lay off Elon? Tinfoil hat, wondering if the Biden administration has pushed for the SEC to go after him. I mean, I think, I think it's possible that, conspiracy theory that the Biden administration is kind of nudging SEC to like put pressure on Elon and Tesla, to kind of give the union made car companies, more wiggle room or more chances of succeeding, I guess, by hurting the main competitor. So, yeah, I mean, I think that's possible. SEC leadership is wise to lay off. I think they would be wise to lay off Elon for sure, but I don't think they will. I think there's lots of pressures from Tesla and Elon haters to like, look, Elon's tweeting about selling shares. You have to investigate it or whatever, so they have to go through the motions. And there's a couple, SEC is a big place. It's not like a small, like regulatory body with 10 employees. I'm sure there's hundreds of employees involved in SEC these days. And there's probably some bad apples in there of people that hate Tesla and Elon too, And just recently there was that news of Tesla or, some law firm being pressured to lay off to fire a lawyer that was previously working against Tesla at the SEC. So I think there's some serious vitriol among some of the lawyers that have worked for the SEC or that do work for the SEC and and Tesla. I don't know what the underpinnings of that are. One of those lawyers, personally just vehemently believe that Elon is a fraud and, all that, if they believe that reality, or if there's some kind of, um, you know, incentive, whether economic or influence or something else amongst, the powers that be that want Tesla to fail, like short sellers and big oil and legacy auto and unions and stuff. So it's hard to know the complexities of that, but there's definitely some bad blood with some people within the SEC and Elon and Tesla.
Yeah, which to be fair, Elon hasn't really helped with either. He's had some
Short enrichment
questionable,
commission.
yeah, short enrichment, or S Elon C, that whole tweet, which I thought was
Yeah.
pretty ill advised. So I don't
Yeah.
think he's got himself many friends there either. But I don't know. I'm always questionable to go to like the tinfoil hat. I mean, the Biden clearly is like has an allergic reaction to saying the word Tesla.
Yeah.
So there's clearly some amount of tension between the overall federal government and Tesla. Now, whether it's actually kind of being directed in a conspiratorial way, I'm skeptical of that. But I don't know. In my mind, this latest kind of issue with that it seems to be stemming from Elon's tweets. With the poll saying, should I sell 10% of my shares to pay more taxes? I think this latest inquiry is just related to that. I don't really think much is going to come out of it. But I don't know. We'll see.
Yeah. Let's go to the next question here. From AJ Price, question: how big of a risk for Lemonade do you see Legacy Auto getting into telematics similar to Tesla and leaving all car insurance to the car manufacturers instead of insurance companies? I mean, theoretically, that's a possibility, right? I don't know if realistically, just like theoretically, it's a possibility that, Legacy Auto is going to build an EV comparable to Tesla. That was always a possibility even 10 years ago. That was a real possibility. Everyone pointed out, so certainly that's a possibility. But it just seems like a pretty big endeavor for like GM or Ford or Stellantis to suddenly say we're launching our own car insurance, arm, and as a tech company with software based, telematics and AI. It just seems like not part of their DNA. It would be very hard. Just like building an electric vehicle is so completely different than building an internal combustion engine vehicle. They're fundamentally very different products to build. And so I just think for a similar reason, the DNA of those companies just isn't really a fit for this. Maybe one of those legacy companies tries to buy Lemonade at some point. I mean, Lemonade's less than 2 billion valuation right now. It's incredible. But yeah, what do you think, Matt?
Yeah, I agree. I don't think they've got the risk appetite to go after something like this. I mean, they're not even vertically integrating to the extent of producing their own batteries, in like designing, cell to pack or that sort of thing. So I think for them to go one step further in terms of vertical integration from beyond what they're not even doing right now on the manufacturing side, which is core to their business, to then go one step beyond that to the insurance side just seems really unlikely to me. I think Ford is actually using, and there are some other auto manufacturers as well that are using like a Metro Mile technology in their new vehicles that they're producing. So to me, it doesn't seem like they want to own this piece of the data stream. I don't think they're really that interested in kind of pursuing this. I think there's more of a chance that the legacy insurers will start to offer some more of these type of products. I know like USAA, for example, does offer like a telematics based auto insurance pricing. So I think more of them will go that route because it's kind of more core to their business, but I don't think the auto companies will do it.
Yeah. All right. Next question is from Brian Gamble on YouTube. Question: could you comment on the idea of social media companies versus gaming companies winning the metaverse space? I think that gaming companies have a better shot at giving consumers what they want. Yeah, the metaverse, when people use that word, it's hard, to define what the metaverse space is. It's easier to say what it is not, I would say. The way I think of the metaverse space, it's such an overused thing. It's just like the evolution of the internet, like the next phases of the internet and how that interoperability of things within the internet are going to work, and technology advances with using the internet. So, I think gaming companies like Roblox are a big play on the coming, whatever this metaverse space is evolving into. We think that's got a huge foothold in that, with the kind of self-fulfilling flywheel feedback loop they have of the developers and user content and such. Social media companies, it's hard to say. I mean, Snapchat, I think, has a chance to kind of put augmented reality, and that's kind of, orthogonal to the metaverse in some ways, I guess. I've never used that word, orthogonal, by the way, but Snapchat with augmented reality, I feel like has a chance to kind of breach that. And we'll see if its competitors, whether it's Instagram or TikTok or others, kind of have some similar camera augmented reality capabilities they put out. So we'll see. Matt, you have any thoughts on that?
Yeah, like I think it seems like the market is kind of increasingly, and I apologize for this background noise. It was so quiet this whole morning up until we went live, and it's like the workers decided to start banging on the walls.
Yeah.
The only thing I would say, like, I think it's the use case for like Web 2.0 is probably going to be a lot different than Web 3.0. So I think what you're seeing with Meta, with Facebook right now, like I think the market is interpreting this pivot as like a little bit of a desperate kind of like defensive posturing. The core business at Facebook is shrinking. Like the daily active users actually shrunk I don't know if it was for the first time ever, but for the first time in a long time. So I think the way people are using the internet now, or maybe 5 years from now is a better way to think about it, is not going to be the way they were using it. So I think to me, it makes sense that you're going to need something like a Snapchat or a gaming type of platform. Because I think people are going to be spending their time more on those sort of kind of unique interactive experiences, or just fun games in a way that what they were going on for like Facebook, like checking on X's is not going to be a thing that's super popular, for like a use of eyeballs in 5 years from now. So I do think there's some
Speak for yourself, Matt. No, just kidding.
I'm
not
don't have
checking
any
out any
X's. Maybe
X's.
that's why.
Just kidding. All right. All right. Last question. Let's do one more question here. Let's see. From Oliver Thomas. Question: how do you feel about the pivot and direction described on the earnings call towards full self-driving and autonomy? Do you think they still bother to push for 20 million cars in 2030 if full self-driving gets solved? Yeah, I mean, I think it makes sense to pivot the direction to start talking more about software and full self-driving, autonomy, and future things. The gross margins and production of Tesla cars, it seems like the efficiency is really incredible. Their manufacturing is going so well that, that speaks for itself. And really, they need to kind of plant more seeds in Dino Street's minds of what is to come with Tesla, because traditional institutional Wall Street, the dinosaurs of Wall Street, they have a hard time understanding the disruption that Tesla is doing and innovation. So I think the meat and potatoes of their earnings coming from production and gross margins is easily understood by the financials, but I think it makes sense to plant the seeds of what's coming. And I do think they push for 20 million cars, as many cars as they can possibly make for many years to come. And I think I think Elon's targeting 20 million cars a year by 2030. So I think that's a pragmatic, whether it's 2032 or 2029, I think in that range, they probably get there. I see there's demand is almost infinite as long as their technology is accelerating so much like it is. So for years to come, that they can just sell as many cars as they can possibly make, but they can't, building cars is very hard to expand. It's not like building 10 million more iPhones a year. Building 10 million more cars a year is much more difficult. More batteries to source, chips to source, raw materials, factory capacity. So we'll see. And Matt, you have any thoughts on that one?
Yeah, I guess I wouldn't. A lot of people probably did interpret it as a pivot, but if you go back to Autonomy Day, and I think that was 2019, it's like exactly what they said back then. The only issue is like back then nobody, like, it was a total joke to think that FSD would result in transforming the company's financials.
Yeah.
So like they went out and kind of kicked butt on manufacturing for a couple of years and, proved that they could do it. And now FSD looks like it's, kind of poised to potentially be that kind of meaningful financial catalyst that they were talking about back in 2019. So they just brought up the same points again on this last earnings call that, if you increase take rate and you increase the price and you have like a robotaxi future where there's like autonomy, the current financials are like a rounding error to what the future financials would look like in that scenario, which, they have been saying for years. So, I think it was prudent just to kind of remind everyone that like, hey, we haven't given up on this, and we're a lot closer to it now than we were then, and so kind of buckle up, because if we do solve this, and if we do get take rate a lot higher than it is right now, the company's financials will look like ridiculous.
Yeah.
And I agree with you on 20 million cars per year in 2030. Even if they you could flip a switch right now and just produce 20 million vehicles, you probably need to lower the price point now or have full self-driving a lot better in order to kind of maintain pricing.
Yeah.
But even if you could do that, it would take years to kind of turn over the existing ICE vehicle fleet. But the economics of an autonomous electric vehicle are just drastically better than the economics of driving an ICE vehicle. So I think I think those economics will sustain as much demand as Tesla will need by the time 2030 rolls around.
Yeah, absolutely. And one last thing I saw in the YouTube comment I wanted to ask Matt you is Aravinda Teganamath asks, Tesla 2022 Q1 earnings per share is estimated at 2026 cents. How can it be smaller than Q4 in 2021? I mean, I think we all know revenue will clearly be higher. I think Troy Teslike, who's we all sort of default to as like maybe the best guesser of what production will be, at least the most notorious at this point, and pretty accurate to a large degree. I think he has like around 330,000 cars total produced and delivered in Q1 of 2022, if I recall from his last estimate, which I think is public by now. If you're not a Patreon supporter, you have to kind of wait a few days for it to be public. Yeah, I mean, at 330 versus 310,000, there's got to be you would think a 5 to 10% uptick in revenue at least from that. And you got to think that the higher priced models are being delivered largely for this quarter versus last quarter. It was probably a mix of lower priced previously ordered models versus, more recently higher priced models. So you got to think the margins for that have to be higher, but they're also spending more money on ramping up the factories. That's sort of the take where maybe the gross margins might not be quite as high. I mean, do you think, it's an early question, Matt, what do you think? Do you think earnings per share is going to be higher than Q4?
Yeah,
We
so I
can go into
just
more
pulled
detail
up
later on your model. Yeah.
my model just to kind of check. I don't think it's gonna like we've seen in the past kind of like step changes in profitability as they increase production. Uh, I was kind of taking Zach's caution on the call at his word. So
Hmm.
he mentioned and we've known for a while that there's going to be gross margin pressure when you launch Austin and Berlin. So I think it's reasonable to take your kind of core manufacturing margin down for the next couple of quarters
Yeah.
relative to where it was in Q4. And he talked about kind of ongoing pricing or supply chain issues and how much they were paying, for expedite costs, like with ports and with shipping the vehicles. So that remains, an issue. Looking at the bottom line, kind of putting all that together, along with, I'm forecasting another decrease in take rate for full self-driving in Q1, which I think is
Hmm.
prudent. So I'm looking at $2.62 right now for Q1.
Oh,
Obviously,
okay.
it's really early, and that's even with backing out the the kind of one-time payroll tax item that was highlighted in Q4. So assuming
Yeah.
that goes away, you get a little bit of a benefit for that and growing the OpEx from there. So like I don't think it's I think we'll have a slight improvement quarter over quarter, but like to me it's like Wall Street seems clearly too low, but it seems like it would be a stretch for me to say that they get to like $3 in earnings per share in Q4, given
Yeah.
everything that they have going on, or sorry, in Q1, given everything that they have going on right now.
Yeah, yeah. One dark horse element, I'm not sure how much it'll impact the profitability or the gross margins, but I do think this quarter could be the quarter where they start delivering in bulk the Model X refreshed. We're scheduled to get our Model X refresh in March, and I think we have some family friends that are as well in March. And we've all been waiting for so long, for like a year, 2 years, for this new Model X refresh, and so I think there could be a really lump sum of Model X refreshes and Model S refreshes still. So what was it last quarter? How many Model X's and S's? It was like 10,000 or something, or 12,000. It's still low compared to 300,000 Model 3s and
Yeah,
Ys,
it was
obviously, but
13,000.
13,000. So I wonder if this quarter, if they deliver, if they hammer out 25 to 30,000 Model X and S's, if that makes a meaningful impact, because you got to think they're higher margin cars once they're kind of being produced more than, or sold more than like a couple thousand. So
Well, I think
I
their
wonder.
actual production capacity is only 25,000 per quarter, if I'm not mistaken.
Yeah,
I could be slightly wrong on that. So they're never going
I
to
think
get
that's right.
quite to that level. So in my mind, I'd be surprised if they even got to 20,000 deliveries for S and
Mm,
X this quarter. Maybe they can, but I don't know.
yeah.
I'd struggle to
It
see
probably doesn't
that
move the
being
needle that much anyway. Even doubling the
exact.
delivery count isn't going to be a huge benefactor to the margins, considering they're selling 10 times more Model 3 and Y. Yeah.
Right. Yeah, that's kind of my thought. I mean, it's clearly they're nice high margin vehicles, but I don't think you get an extra like 20 cents per share out of out of kind of fully
Yeah.
ramping up that production.
Maybe 5 cents per share. Who knows? But
I'd have
yeah.
to do the math, but yeah, I don't think it's going to be
Yeah.
like a big needle mover.
Yeah. 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 So, all right. Well, it was good chatting, Matt. We'll do it again next week with everyone. And this is being recorded on our YouTube channel, Good Soil Investment YouTube channel. So go ahead and watch it from the beginning. If you missed part of it, it'll be on there almost immediately after we cut this off. So thanks everyone. And we'll be here next week, same time, same place, Twitter Spaces and YouTube Live.